Well, the U.S., UK, Canada, and the ECB all joined Japan in pledging to step into the currency markets to weaken the yen. You just saw confirmation from the New York Fed that they did indeed intervene. It was the first coordinated intervention since 2000, when all the central banks had come in to prop up the euro. For more, we are joined by the Bloomberg Best on overall currency forecasting and the head of currency strategy for Wells Fargo, Nick Bennenbroek. Nick, good to see you again.
Good morning.
So the question is this going to stabilize the yen? Is it?
I think it will. I mean, this was a very significant action by the Bank of Japan and Ministry of Finance with all of its partners, and it may not be over yet. We got, about three big figures today, but I wouldn't be surprised if the Bank of Japan, the Japanese authorities, wanted it to continue. So I think
down about 3% for the yen is what you're saying?
Down about 3% for the yen against the dollar, but I wouldn't be surprised if the Japanese authorities wanted this trend to continue, to see further weakness in the yen. So I think further intervention is a possibility next week.
Further intervention for how long till we get to where?
Well, I think, they would perhaps want it to get close to the mid-80s, so maybe not all the way to 85, but at least to the 83 to 84 level. And, when you compare this intervention to the one that took place in September, we saw a 3% move back then, and we've seen a similar today. But I believe, I think the Japanese would want even a more, concerted effort this time around, so a more of a reaction this time around than last time.
Okay, let me, I was reading a couple of articles this morning about, proposed intervention and intervention. Remember Asuki Sakakibara, Mr. Yen in Japan, and they did an interview in the Financial Times, or he did an interview in the Financial Times, and I just want to bring up what he said about that. He said, quote, "In terms of the real exchange rate, 78 or 79 yen is not a level where Japanese corporations suffer much." He clearly is at odds with what the Bank of Japan and the Finance Ministry think now about the yen. Apparently, he's basically signaling that this may be too early for intervention. What do you think about this?
Well, it's true that the real exchange rate is less expensive today than it was back in 1995 when we were last at around about this 80 level. But I think it's fair to say that when you look at the dynamics of the Japanese economy and the fact that it has, struggled somewhat over the past 2 decades, I don't think there's any rationale or justification for the real exchange rate, the inflation-adjusted exchange rate of Japan, to be as strong now as it was back in the 1990s. So I actually think these kind of levels, 79 to 80, they're appropriate levels, I think, for the Bank of Japan, the authorities, to be intervening.
Well, let me ask you this. I mean, eventually, wouldn't this have corrected itself? When the markets, when people, when people would realize that, look, we're recovering here in Japan, we're rebuilding, that this yen exchange, that the yen would have eventually reversed course and weakened itself.
Well, that's true. I mean, certainly the fundamentals would have taken over at some point and the yen would have weakened. Of course, the dynamics of what's happening now in Japan, of course, with the earthquake, with the tsunami, all the damage and the near-term economic effects, I think the idea here is simply not to add to an already very difficult situation by making things tougher for those exporters and all for those exchange rate sensitive firms in Japan. So the idea is really, this is one way of mitigating the damaging effects of what we're seeing from Japan over the last week.
Nick, in your view, what we saw a day ago, when we saw this 4.5 move higher in the yen at the end of New York trade, what was that about? Was that pure speculation or what?
I believe it was probably a combination. It was largely speculation. I think it was a combination of technical factors, the fact that we broke the lifetime high or the lifetime low of the Japanese yen, depending on whether you're looking at the dollar-yen rate. And it's possibly, I think, related. There was possibly some options-related activity there as well. But I definitely think it was primarily a market-driven move and largely speculative.
So in this instance, then, are the central banks, are the finance ministries, are they all fighting speculators? And is this what this is about?
Well, they're certainly taking on the market players in terms of, the positioning that is there in the market. So, they don't want the yen to go stronger, and they're sort of leaning against the wind as far as market positioning is concerned.
Okay, so from bottom line is 85, 86 is about where you think.
I think they want to get to the mid-80s.
Okay. Nick, thank you. Appreciate it. Nick Bennenbroek, our Bloomberg Best on currencies with Wells Fargo.